Hello traders, welcome to TradeVox. In today's video, I will show you how I analyze the markets to get this amount of profit. And I hope you guys watch this video to the very end in order to understand what strategy and technique are used when trading. So let's dive into the video. For most of you that are very familiar to supply and demand and also trendline break, I'm going to unravel it right now and show you how it is sequentially so you will know what I'm talking about. Now, this is a very typical example of a bullish flag whereby it consists of price huddling around two different trend lines before a breakout can be predicted. So we are actually looking for a breakout to the upside for us to complete our bullish flag. But one thing that traders don't know about is that there are certain times whereby the bullish flag fails and it breaks below, leading to a reversal, leading to a price change for that moment. So when trading the bullish flag or the bearish flag, have in mind that there are going to be two ways of you to trade it. It's either you wait for a break to the upside or you wait for a break to the downside. This is typically the safest way I trade flag patterns and also any other type of patterns given consolidation box, anything that has to do with trend line. I mostly use two ways. They either break below or they break above. That is the certain truth. There's nothing certain that this will surely form a bullish flag, because if it is a bullish flag, it's going to be complete up like this and break above, making it a complete bullish flag. So as we know this concept, we are going to be on a safe pace and always making sure that in any analysis we do, we should have the motive that markets can either go up or down. So you have to either put a trade up or put a trade down. Now in the concept of supply and demand, because I use supply and demand for the technique in getting this profit too, is basically the array of rally-based rally. Remember a rally-based rally, we can see here there was a swing long move to the downside, which is a rally. Then we had a sharp pulse to this upside. We call this place a base and it's rallied down back. One thing about supply and demand is that when there is a sharp move, the candle that formed at the tip of that sharp move is going to be our supply zone. Right now, for instance, this place right here is our supply zone, but it is already taken. It is already taken, creating another sharp move down. When there is a sharp momentum move downward, that means there is a supply in the market. Why if it's upward, that means there is demand in the market. So right now we can see that this supply zone is not yet retested until this happened. We had a retest here and you can see markets went down straight to various zones. So that is just how to trade rally-based rally, supply and demand zones, and also have the concepts in mind of any trend line you trade, make sure they have two outputs, which is breaking upward and breaking downward. So let's go to the very charts that I analyzed. So okay, this is the CADJPY and I was in the 1 hour time frame when I noticed a very sweet pattern the market was creating for me, and I quickly went back a few minutes or a few hours. I quickly went back to check the past data and I saw that we were currently in an uptrend. I just basically used the start of the month. This is the start of November. This is the start of November 1st, and you can see that we were currently in an uptrend. After that, I noticed this great move to the downside right here. We had this great sharp move to the downside, and within those sharp moves, there are supply zones. We can see this zone right here was a supply zone, and it is not yet tested. Why is it a valid supply zone? Because after this zone, we had a very sharp move down. You can see these great momentum candles that's formed after this zone, making it a great supply zone. And right here again, we can see the same instance, but this zone was taken out just like how I showed you in the concept few minutes back. This zone has been tested, but it created another sharp impulse move to the downside, making this zone right now a supply zone again. We had a supply zone here. So right now we will focus on the latest supply zone that I have right here. So, okay, I drew my supply zone, and right at the very tip of the supply zone, I could see a bullish flag on its way. But remember what I said, guys, when you're drawing using Trendline, there are always going to be two ways. It's either the breakdown or the break up. And we can see this trend line that I drew right here. Most people will expect price to just push up and give them a nice bullish flag, but they don't know that price can do this and continue going down. That is why most traders are very nonchalant about creating two-dimensional trades, which is buying and selling. So after I found my zone, I knew that I have to be two-dimensional. So my buy order is going to be at the break of this supply zone, as well as this bullish, as well as this top trend line right here. So I'm going to be setting a buy stop at the break of this, and my stop loss is going to be slightly below the supply zone. Take profit, I will target this next supply zone that had not been tested, bagging about 102 pips. That is if it breaks to the upside. And to the downside, I am going to be taking my trades after the break of the trend line to the downside. Stop loss slightly above the top of the trend line, and my take profit is going to be this zone right here, because we are having more like a rally based rally in that zone. You can see this whole zone right here is going to be my take profit, bagging about 56 pips. So hang on with me. I just went to my MetaTrader and I took my buy stop and my sell stop, and this is a very fresh chart. So let's see where the market goes in the long run. I'll hopefully track the market and see which side it took, whether it's the buy side or the sell side. Probably just depends on the breakout candle. If it breaks to the upside, then the buy stop will be triggered and I will be in a buy position. If it trades to the downside, then the sell stop will be triggered and I am trading to the downside. So let's see what the price gave us in the long run.
20 minutes later.
Okay guys, as you can see, our sell stop was almost triggered. If you can see right here, the sell stop was almost triggered, but then price reversed and it took our buy stop, leading us to this profit. And actually I took my profit around here. I will tell you the reason why I took my profit right about this candle, and I will tell you why I took my profit there. If we skim back, we can see the law of Quasimodo, which is in an uptrend, price makes higher high, then a break of structure to the downside before reversing and dropping again. So this is exactly what happened right here. We can see this is a high, here we have a high, and we have a lower high at this bottom. Then over here we have a higher high, before having our lowest low right here. Once this kind of formation happens, we know that there is a Quasimodo in the market structure. And the ideal thing we need to do is to sell at the left-hand corner of the previous high. That is where the Quasimodo broke. And if you can see, I'm just draw a box right here at this left-hand corner. We had price touch the candle. When I saw price touching the candle and retesting, I just took half of my profit, because to be a good trader doesn't mean that you should not take profit sequentially. You should also take profit part by part. That is also a good thing to do as a trader. So always learn to pay yourself first. Basically, always learn to pay yourself first. So when you see any tiny details, take your profit, even though it's half or quarter, so that you can be in a safe zone of securing some bags. Okay, so I'm still expecting this price right here. I'm still expecting this price to reverse and go up back to the initial take profit. Then I'll be taking my final profit right there. As you can see, during the trend line break, this was a fake out call. You see price broke below the trend line and we were going for a reversal. Assuming this trade was triggered, then we will think that we are in a sell position. But remember what I said, always have in mind that when you're trading trend line breaks like this, make sure you set them for two sides. They either break up or they either break down. So you know how to manage your risks. Assuming my trade was triggered, but it went over to hit my stop loss and it took my trade by trade, I will still secure some profit and also make it break even if the case may be. In that case, I can also always tell people to try as much as possible to monitor their trades and not just put buy stops and sell stops, hoping that the price would do exactly what they have predicted. And you know that the market isn't really concerned about your prediction, so always watch the markets and see what the patterns are forming, see what the candlesticks are saying before you're sure to take your trade. So guys, that's how I was able to make that amount of profit, and hope you guys enjoyed today's video. Make sure you like, subscribe, comment, and very happy because TradeVox family is growing, and I wish you guys watching a successful trading week ahead. With that said, see you in the next video. Peace.